we start the show by telling you about the three guests that will be joining in over the next half hour. Prasun Gajri, CIO, HDFC Life Insurance Company is with us. There's Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services, as well as Prakash Devan, Director at Altamont Capital Management. Prakash, we'll start off with you. Do you think that after that, rise that we saw in the markets, that this kind of a cut, it was pretty inevitable?
Well, Naman, if you look at what's driving this market down, particularly in the last 5 sessions, is very clearly, some of the index heavyweights where, we've seen some money being taken off the table. And mind you, these are stocks which in the short span of 2 months have given almost like 18, 20, 22% of an upside. So I really am not very surprised when you see that behavior. What would start getting worrisome, as Nikunj pointed out, is if the momentum in the broader markets is completely lost, all the mid caps start losing sheen, start losing that attractiveness. And mind you, this week is going to be slightly more choppier than what we've seen in today's session, because earnings is still, the earnings season is still to kind of be around. SBI, M&M, some of the big heavyweights from some of these sectors are out there. We're likely to come up with numbers. So I would not really call it a change in trend of sorts. This could probably be a pause before we see a little bit of an upsurge again from fresh FI buying into some of the mid caps particularly.
Sandeep Wagle, has this market lost momentum? Has the trend reversed, or this is a counter trend in a otherwise uptrend?
Nikunj, I would say at least with some degree of certainty that the market seems to have or is losing momentum, and this is a crucial level 6080 which I've been talking about all this while. And if we have not still got that conclusive evidence where it is closed below that, so it is still at that. If it bounces back from here, we may still be back to 6250, 6300, though 6350 will be a tough nut to crack. I don't think it will be done in the immediate future. But talk of some time, yes, that should not be a problem. And if 6080 is taken out tomorrow, which is quite possible, then we can even go down to as low as 5900, 5850. So as a trader, then I would think of shorting on every rise. I mean, in any 40-50 point move upside on the Nifty, I would go short for a 100-150 point downside. Stock specific view still remains on the positive side, I would say. And I would rather wait and watch, not be in a hurry to jump to conclusions. But yes, we are getting moves both sides. There are some stocks which are looking good, there are some stocks which are outperforming, and there are some stocks which are looking weak. So, this is a time where you can be more stock specific.
Okay, we'll get you to give us all of your stock recommendations. But in the meantime, Prasun, what is it that you're buying and selling in the current market?
Clearly, this has been a market which has seen, I guess, all colors of the last 3-4 months. We have seen the lows and then suddenly a strong rise in September, October, and again market is at a level where people are getting jittery again. The way we are looking at the market is, I think it's a market where you want to be careful, clearly, because you really don't know how the impact of tapering is going to be, but at the same time you do not want to be completely despondent, you do not want to be completely selling out of the market. To my mind, this is becoming a market which is buy on dips kind of a market, where you really look at when the stocks are falling, where you see valuations and buy. That is a lesson which we have learned from the last 2 months clearly, because the moment you get a little bit of good news in this oversold kind of a market, whether it's reasonable results or whether there's a little bit of liquidity flow, things tend to just exaggerate itself in terms of stock prices.
I guess 10 days ago we celebrated a new high on the index, and now markets are realizing that we celebrated the new high index on the index very early. Market has lost momentum, things have reversed, and the cyclical end of the market is now taking it slightly easy. But if I have to nail it down to one name which did exceptionally well today, was DVs. And mid-cap pharma clearly has been the story for last 2 or 3 days. First it was Aurobindo Pharma, today it is DV, and even in large cap pharma today we saw a lot of leadership. Prakash, what is your take on DVs? They came out with numbers came over the weekend, extraordinary growth, power problems are sorted out, and even after the recent run up, the stock is looking very cheap.
Yeah, I think, Nikunj, very clearly, this is a stock that wasn't carrying as much favor as your Sun Pharmas and the Lupins of the world were, while they hogged all the attention. This was a stock that was consolidating very seriously. And I think the mix of the business mix itself for this particular company, it's not overtly dependent on any one particular business area, and their mix between services and production both is something that's going to be paying off very soon. Once we start seeing some shrinkage in the margins for the API and the bulk guys. So my sense is Divi's is kind of coming back into some sort of a reckoning. The numbers very clearly tell you that things are not bad at all for somebody who's looking at entering now at these levels, and you could still have some sort of an upside. So Divi's and Ranbaxy, to my knowledge, would probably be the best two stocks at this point in time if somebody were to go back into the defensive play at current levels.
Disappointing day, but what to watch out for when it comes to the markets tomorrow. Of course, the FI activity. Now, interestingly, FIs have turned net sellers in the index futures in the last 3 days, and they've sold something like 2,000 crore rupees. The dollar index, that continues to put pressure on the rupee as it trades above the mark of 81 for the last 3 straight days on the trot. And of course, the PSU banks, very disappointing when it came to the numbers, but will the leadership continue in the banking space or not? And those are some of the key factors I would think all are really important.
I guess for a non-sophisticated trader tomorrow when you wake up, you got to look at two index. Number one, the dollar index and what happens to the US bond yield. That will really decide the script of how risk-on favor for global equities as an asset class will move in the short term. But for a local trader, it's PSU banks. PSU banks have rallied against fundamental odds. Across the board, PSU banks had appreciated by about 20 to 25% from the recent low, and now they are in a mode of correcting. So somewhere in the system, I think the weak end of this market is looking slightly shaky. And if PSU banks for the moment, if they continue to decline more, that will drag the bank nifty down as well. So watch out for the bank nifty. If the bank nifty corrects more, that really will exert some pressure, at least in the short term. But otherwise, at a global level, the dollar index and really the US bond yield will hold the script, or will influence the script of how Indian markets will move in the short term.
Okay, moving on then, of course, earnings is going to be very an important factor. But other than that, the key question, as you pointed out, the tapering fears, they continue to come back and haunt the market. And every time we utter the word taper, it seems that the markets really go into a friendly. But is this really justified? And the question remains, the tapering fears are back, but are they valid? And Prakash would like to pose that question to you.
Well, Aman, as they say, it's more of the expectation or the, expectation of something negative that spooks the market more than the reality itself. And this is a classic example of that situation where, we moved from whether tapering will happen to no tapering, and now, life beyond tapering as well. Now, there is a school of thought in the US which believes that the way the US economy is firming up, even the tapering could not have such a significant impact if the quantum of tapering is not very high, even if it were advanced to December or Jan or wherever. My sense is we as an emerging market participant possibly have our allocation intact, and especially coming into the new year, we should not see so much of a pull down in terms of the flow that which usually gets allocated towards Indian markets, provided our macros get into place. So we'll have to watch more of that and not worry so much about the tapering. And if we can get that act together, I wouldn't really put too much of a weightage on the tapering issue at this point in time.
Sandeep, how important is the price action in PSU banks for the moment? Because that is one end of the market which surely did rather well in the month of September and October. But now the cyclical end of the market, or the PSU banking end of the market, is taking a hard knock.
Well, Nikunj, I would say that most of the fall has come in already. The bank nifty has fallen from 11,700 to 10,700. In that sense, it is already shaved off a 10%. Some more downside, yes, like I would talk of a range of 10,450, 10,500, and on the upside 11,000 to 11,200. So in that sense, to sell at the current level doesn't give me that comfort. Not to say that it will not go down from here. It will go down from here, probably 200, 250 points. But I would be comfortable selling it at a little higher level, say 11,000, 11,200. And any bounce back should be used to create a short position or sell it into that level, rather than selling at the current level.
Prasan, when you make a valuation argument for the beaten down cyclical sectors, under-owned sectors, the question remains, who exactly is going to buy into this space?
Well, I agree with you. The domestic money is still not coming in. It has been a FI-driven, liquidity-driven rally in that sense. But if you look at it, even what FIs bought and what stocks really did well in the last 2 months, it is very clear that in some of the sectors which were so-called safe havens or defensives, at the margin, the results are not really living up to the hype, except maybe few stocks. And therefore, I think there is a move also of the FI money to look at stocks which are beyond these. I'm not saying it's a big move. I'm not saying it is happening across the board, but I do see the results of last 2 months clearly indicate that that is happening. And the domestic front, I'm sure whenever the money comes in, the domestic fund managers would clearly focus on some of these sectors. So I can't predict when the domestic money really starts coming in, but if you have the money, I think it is not a time to ignore these sectors. I think it's just these calls have gone wrong over the last 24 months, but clearly to my mind, the way I've seen the markets behave over the last 2.5 months, I do believe this is not a market to just sit tight on the defensive sectors. It is time to look out for stock specifics. I'm not advising, we are not really looking at any stocks with beaten down balance sheets and serious leverage issues or serious governance problems. I think those are still ignored. But within the rest of the universe, you look at good businesses and valuations which are comfortable. I think that is the way to go. And that has to be added at the margin to the portfolios. As you said, we are not really completely exiting any of the other sectors, as I said. I mean, we are looking to add at the margin to the sectors which are not necessarily done well so far.
Prakash, out of the 4 important numbers tomorrow, Hindalco, Apollo Hospitals, Canbank and Fortis, take your pick.
Well, I guess Apollo Hospital should be the most promising because I mean it's a stock that's been in the news for a while now. You know, we've seen some very clear interest come through. The management's kind of reiterated its growth plans in a very affirmative way. So I would go with the stock which has all the positive vigor around it rather than the other 2-3 where, you know, metals, I'm sure it's still not out of the woods. Banking, particularly Canara Bank, is not something that would be one of the best run banks on the NPA side. So I would avoid the others. Definitely Apollo Hospital is the stock to watch.
How would you be viewing, Sandeep, some of the stocks that came under fire from the PSU banking lot? I mean, take your pick, Central Bank, Vijaya Bank, Dena Bank. They all came under pressure on account of a dismal set of numbers. Which are the shorting candidates?
Well, all of these are shorting candidates, but a little bit on an upside. Because most of them have already fallen. So in that sense, little bit bounce back. They can go up also that way. But yes, I do agree broadly in the banking space, the direction is down. So rather than buying for that small up move, I would rather wait for that up move to go short for a bigger down move. And Bank Nifty, I think I would talk of a 3-4% trading downside even from the current levels. So maybe 2-3% up, you can play for a 7-8% downside.
Finding out some of the stocks to keep on your radar with our experts. But first, let's get in a sense as to what the dealing rooms are talking about. Yatin's here with the list. Yatin.
Well, the 2 stocks that you need to watch out for in trade tomorrow, number 1 would be Infosys. Of course, we have seen the rupee depreciate sharply versus the US dollar, and IT stocks possibly would be gaining because of this. And Infosys is one stock in the IT space wherein dealers have been quite bullish on, so this is one buy recommendation. On the contrary, Titan Industries is one stock which looks extremely weak to the dealers. We have seen that MSCI has deleted Titan from the global standard index largely because of FI restrictions placed by the RBI in terms of further investment in shares. And also, most of the brokerages believe that there could be $35 million of sell flows from FI desks because of this deletion. So Titan Industries is one stock wherein dealers are recommending a short.
Right, Yatin. Thanks a lot for that. Sandeep Paglia, what are your top ideas for tomorrow morning?
Nikunj, I am biased on the short side, as I said. I would wait for some bit of a move to go short. Cement space is looking weak. I have chosen an ACC to go short with a stop loss of 1071, target of 1008, looking for a 7-10% downside. The second call is a buy in Divi's Lab. I mean, use every bit of declines or corrections to buy this stock. The pattern is very clear. Long term, I see this stock somewhere between 1200, 1220. That is 3 to 6 month view. But talk of a trading upside, I would talk of a stop loss of 1085 and a target of 1152.
Prasan, would you recommend a complete exit from the IT, pharma or FMCG basket, or stay put in some of them and profit take partially and deploy that money into names like banking stocks, metals, autos?
Exactly. I don't think it makes any sense to exit out of any of these sectors. These are clearly large sectors. As I said, these are good structural themes. So one has to remain invested. But I guess most people have been overweight, and those overweights have to reduce. You need to book some profits and utilize that to invest in sectors which have been ignoring. So I think that is the important lesson, and that is the way the markets have behaved over the last 2 months. So I think that is what I mean when I say that in this fall, whenever the market is giving opportunity, you book profit in some of the defensive sectors and move into other sectors. I think that is the way the market will give you returns whenever it turns over the next 6 months, 12 months.
Prakash, spill the beans. Give me a flavor of your personal portfolio. How are you allocating capital? What are your top holdings?
You know, Nikunj, surprisingly, the number of stocks that comprise of almost like 40-50% of the portfolio have started reducing, and that's because some of the key ones have started taking overweight position. One of disclosure, of course, that I own positions in this. United Spirits is one of the topmost holding in my portfolio. And on the pharma side, we started adding Ranbaxy at current levels because we expect Ranbaxy is a stock that could possibly, be the next, scorcher of sorts like Sun Pharma did. Now that all the negativity is behind it, and you've seen it improve, and there is of course a lot of buzz in the M&A space also as far as Ranbaxy is concerned. So these two, I think, would probably be the best surprises of sorts going forward for most investors as well.
India Cements, do you see more steam in this counter for tomorrow, Sandeep?
Some more upside, yes, but cement space is weak. I mean, this is a stock-specific move. I mean, reasons would come out later, but I would not be that enthused to buy this stock. This was a good buy 3-4 days back when we had a buy, and that move has already come in. But the cement space per se is weak. I have a sell in ACC in that sense. Also keeping in mind the way the Nifty is moving, I would be more careful and avoid a buy in India Cements.